Welcome back. It's time now to take a look at the top business stories. Union Properties looking to repay 2 billion dirham of loans. UAE banking and finance sector hiring again. And additional US stimulus not needed according to IMF acting chief. Let's look at the UAE stock markets first. The DFM and ADX ended the trading day in opposite directions. The DFM lost 0.8% to close at 1,552 points today. Only few shares gained, for instance, Commercial Bank of Dubai, which rose 3.3%, or Dubai Investments, which was up 1.1%, and Emirates MBD, which gained 1.7%. Largest loser on the DFM was Dubai Refreshments Company, which lost nearly 8%, and Gulf Finance House, which fell 5.1%. 134 million shares were traded, valued at 147 million dirhams. And over in the capital, the ADX gained 0.2% to close at 2,696 points. Best performing sector was the consumer staples sector, with Actia Group adding 2.9%. Etisalat gained 0.5%, and Sudan Telecommunications Company soared 5.6%. The real estate sector was among the losers. Alda Properties dropped 2.2%, so Real Estate 1.5%, and RAK Properties 2.7%. 44 million shares were traded, valued at 87 million dirhams. And let's now look at the GCC equity markets. The country's main benchmarks ended mixed today. The Organization of Petroleum Exporting Countries, OPEC, is meeting today to discuss whether to increase its oil production quota to meet higher global demand. So what can we expect from the meeting, and will the 12-member organization give in to pressure, coming, for instance, from the International Energy Agency to raise quotas and by that ease oil price pressures? To talk about the issue further, we earlier spoke with Philippe Dauba-Pantanacce, senior economist at Standard Chartered Bank.
Well, actually, the OPEC committee has asked to raise the official quota for this meeting. And we know that the Gulf Arab countries, including first and foremost Saudi Arabia, wants the official quota to be lifted. But certain OPEC members are against it, such as Iran, but also South American countries. But irrespective of the end result of the OPEC's decision, I think that we need to distinguish from the actual oil production. And we know that regardless of this, Saudi Arabia will raise its oil production by 500,000 barrels a day, taking it to over 9 million barrels a day, which will be a record high.
Meanwhile, economic data coming out of the US disappointed the market of late. Investors are therefore increasingly speculating that the US Central Bank Fed could launch a third round of quantitative easing, as it is set to complete its second round of bond purchases this month.
We actually do not think that there's going to be a quantitative easing round 3. We think that the quantitative easing 2 or QE2 has worked, actually, contrary to other analysts. And the situation would have been much worse without it. Now what's happening is that the difference this year compared to last year is that inflation expectations are not declining. So this will really put the Fed away from more quantitative easing. We actually think that the quarterly GDP growth will pick up in Q3, and that the last quarter of the year will see a GDP growth for the US at 4%.
Dubai's second largest property developer by assets, Union Properties, is looking to repay 2 billion dirhams worth of loans this year. Reason being that the company can cut its interest costs and gain bank support to restructure other loans. Union Properties raised 1.1 billion dirhams from the sale of the Ritz-Carlton hotel in Dubai and another 900 million dirhams from other property sales, with which it will pay back the 2 billion dirhams. While Union Properties settles one loan, it delays another. According to a local paper, the company's chairman, Khalid bin Kalban, said that the company is looking to delay payments on a 4 billion dirham loan until 2016. However, they will continue paying interest. The UAE's banking and finance industry is hiring again and attracting top UAE talent, according to the Middle East Job Index released by Bait.com. Banking and finance topped the poll with 41% of votes. followed by construction with 32%, then oil and petrochemicals with 31% of votes. Telecommunication came in fourth with 30% of votes, followed by tourism and hospitality with 26%. Experts say this rise is due to positive business and economic sentiment, which has topped last year's levels. And in our fast financial news, Qatar, host of the 2022 Soccer World Cup, plans to offer the first tender for its railway and metro system in the next 3 months. That's according to an executive of the Gulf States Railways Company. The total cost of the railway project will reach $36 billion. Sovereign wealth funds currently focus more on smaller investments. That's according to a report by London-based Monitor Group on state-owned investment vehicles. Also, they began to shift their focus more towards emerging markets. Last year, the value of global sovereign wealth fund investments fell 23% compared to 2009. However, the absolute number nearly doubled to 172. And after the break, we will run you through what's making the headlines in international business today.